In the housing market where owning a home has never felt more expensive, it sounds like a lifeline. It is a supposed proposal to slash your monthly payments and finally hand you the keys to your own home. But this story is not as simple as it looks at all. Over the weekend, a post on Donald Trump's True Social account showed his picture next to the word 50-year mortgage, suggesting this new plan. And this was followed by a social media post from Bill Pulte, who is the director of the Federal Housing Finance Agency, and he stated that thanks to Donald Trump, we are indeed working on the 50-year mortgage, a complete game changer. The announcement immediately divided people. Supporters saw it as a bold way to tackle affordability, while critics called it a disaster in the making that is only going to enrich banks. And while the headlines went viral, so did the confusion. Some sources suggest that the idea was not fully vetted by top administration officials before the announcement. Is this a serious policy, a half-baked idea, or something else entirely? And more importantly, will a 50-year mortgage actually help you, or is it going to be a devastating financial trap? We're going to be breaking down the shocking numbers and what this plan, whether real or not, actually means for your wallet. Before we get into the math of the 50-year loan, we have to understand why this idea is so tempting. The American dream of home ownership feels like it is slipping away for millions of people. Right now, the country is facing a severe housing shortage, and affordability is at a historic low right now. The numbers are staggering. Home prices have surged dramatically since 2019, and one report from Redfin noted that a typical homeowner now spends 39% of their income on housing, which blows past the 30% threshold that financial experts recommend. This crisis is fundamentally changing who can buy a home, and according to the National Association of Realtors, the median age for a first-time home buyer has hit a record high of 40 years old, which is up sharply from 33 years just a few years ago. Think about that. People are waiting an entire extra decade to buy their first home, often because higher rent and other debt make it impossible for them to save for a down payment. So what would this actually mean for your wallet? So the main selling point of a 50-year mortgage is simple: a lower monthly payment. By stretching the loan out over an extra 20 years, the idea is that your payment is going to drop and give you some breathing room as well. So let's break down the numbers with a real world example here. So imagine that you're buying a home for $400,000 with a 10% down payment, which leaves you with a $360,000 loan. Assuming an average of a 6.25% interest rate for a standard 30-year mortgage, your monthly payment for principal and interest is going to be around $2,216. Now, let's apply that to a 50-year mortgage. If we assume the same interest rate, and we're going to come back to why that is a fantasy, the monthly payment is going to be around $1,967. That is a savings of about $250 a month. For a family struggling to make ends meet, that $250 can feel like a lifeline, right? It could mean the difference between qualifying for a loan or being stuck renting forever. And this is the core of the argument for the 50-year mortgage. It is pitched as a way to get your foot in the door, allowing more people to enter into the market. That $250 in monthly savings comes at an absolutely staggering long-term cost for you. This is the financial trap right here. And while you're saving a little bit of money each month, you're going to end up paying for it many times over in interest. So let's go back to our $360,000 loan. With a 30-year mortgage at 6.25%, you're going to pay approximately $438,000 in interest alone over the life of the loan. That is a lot, even though this is kind of standard. Now, hold on to your seats for a minute. With a 50-year mortgage, the total interest paid skyrockets to over $816,000. Let me repeat that, $816,000. You're going to pay nearly double in interest here, an extra $378,000 out of your pocket, all because of the privilege of saving $250 a month. This isn't making housing more affordable here. It is just changing who you pay and for how long you pay them. It is a plan that is going to ultimately reward lenders with extended revenue streams far more than homeowners. But the pain doesn't even stop there, my friend. One of the most critical parts of home ownership is building equity. With a 50-year loan, you're going to build equity at a snail's pace here, okay? For the first decade or more, your payments are almost entirely going to interest alone. And according to Lawrence Young, who is the chief economist for the National Association of Realtors, it could take nearly 40 years just to pay off half of this loan balance. This creates a dangerous situation for everybody. If home prices dip even just slightly, you can even find yourself completely underwater, owing more on your loan than what that house is worth. This makes it almost impossible to sell or even refinance, which turns a home into a pseudo rental where you're paying the bank for decades without even building any meaningful wealth. The trap of the 50-year mortgage goes even deeper than just the horrifying interest payments themselves. Listen, there are two critical factors that we haven't even touched on yet. So, first of all, the interest rate itself. Listen, we've been using 6.25% for both of these loans to keep it simple, but in the real world, that will likely never happen. A longer loan is a riskier loan for the lender. So a 50-year mortgage is going to undoubtedly have a higher interest rate than a 30-year one. Some analyses show that if a rate on a 50-year mortgage was just a bit higher, it can completely wipe out the only supposed benefit of a lower monthly payment. And secondly, and perhaps the most absurd, is the human element here. The median age of a first-time home buyer is now 40 years old. If a 40-year-old takes out a 50-year mortgage, they're going to be 90 years old when they finally make their last payment. Most people are never going to pay it off in their lifetime. So this is not just a loan. It is a form of generational debt, a financial burden that is going to be passed down from generation to generation. Economists and other experts have warned that this is not the answer. The real solution is not to create clever ways for people to take on more debt. It is to address the root causes of these financial crises. In the end, the story of the 50-year mortgage is a cautionary tale. Listen, it shows how in a climate of intense financial pressure, policies that offer a short-term relief can hide devastating long-term consequences. While this specific proposal may or may not become official policy, it will currently require a change in federal law. The idea itself has opened up a critical conversation about what we're willing to sacrifice for the dream of home ownership. The answer should not be our financial futures. Now I want to hear from you, my friends. What do you think about the 50-year mortgage proposal? Is it a creative solution here or a dangerous trap that is only going to benefit the banks? Let me know your thoughts in the comment section below. And if you want more honest breakdowns about the financial news that affects your wallet, make sure you subscribe to the channel and hit that notification bell so you never miss an update from me. Thank you so much for watching, and always remember that the best time to invest in yourself was yesterday. The second best time is now. You got this.